Financial skills, tools for business and leadership. The leaders run organizations to achieve their visions, goals and objectives. To do so, these organizations source and allocate funds for the leadership. As financial resources are always limited, leaders have to struggle between meeting their goals and objectives, and overcommitment of resources. This short presentation is to further the understanding of the financial constraints in our economic organizations. A manager who is given a leadership role has to carefully evaluate his or her mission, and then ensure effective use of available resources. After all, any achievement that uses disproportionate amount of resources is only a partial success. Welcome to our presentation on financial skills, tools for business and leadership. Our economic environment today. We live and work in an economic sphere. Our activities and life are all measured in financial terms, and there is nothing in our daily activities and life that is not equated in money terms. The resources, assets and money that we have are also limited. Knowing our finance therefore matters, and very much so for our businesses and companies. Organizations and their resources. Operating an organization requires finance for assets, people and services. All aspects of organizational activities are eventually measured in money terms. Finance of an organization is a concern for everyone, and not just for the CFO or CEO. Understanding finance is necessary for managers to manage their resources. Managers who understand the finance are then strategic assets of the organization. The organization and its financing. The typical organization chart of the company shows the various functions with specific budgets for expenses and revenue. The finance function arranges the funding requirements and ensures full accountability for the spending by each function. But who incurs the costs and spends the money? It must be the heads of department and their managers. These executives make spending decisions whether for an extra head count, or authorizing overtime payments or replacement of faulty materials. Similarly, expenses from customer service to debt collection activities are decisions and responsibilities of the managers in charge. In a group of companies, the parent company similarly allocate resources to its subsidiaries or related companies. In turn, the heads of these subsidiaries delegate the spending authority to the subordinates. This can be said of a company with a large network of branches or undertaking a number of independent projects. Each branch manager or project manager is tasked with managing the outcome given a specific allocation. In an attempt to meet their performance indicators, sometimes financial resources are requested and used with unclear accountability or economic justification. The end result is often bloated operating costs, reduced cash flows, and eroding profit margins. The finance function. The finance function is not the direct business function engaging customers and production. Therefore, it has no authority nor ability to decide on the spending in different functions of the organization. It does, however, plays an advisory role by reporting on the effectiveness of resources to top management, and a consultative role for the managers if they require. The function of finance covers the sourcing of funds, the allocation of financing to user departments, and tracking the utilization of finance. Users of finance. Funds raised are allocated to run the business operations covering purchase of assets and equipment, procurement of materials and supplies, hiring manpower and development of work skills, securing power, communication and support services, building markets and securing customers, as well as accounting and control activities. Cost-benefit efficiency. Financial resources are limited and costly. Each use of financial resource must then bring optimum results. The optimum results would be an appropriate return on investment and positive cash flow. Operating conditions may vary from the budgets and remedial actions are needed from time to time. But control over the use of financial resources lies with the user departments. Therefore, recognition of this cost-benefit relationship by the users would improve resource utilization. Leaders and resources. An organization is operated by a set of leaders, and each leader directs and controls his part of the mission. Each leader also controls and decides on resource deployment. However, achieving goals and mission without financial constraints is a fairy tale. Allocated resources such as equipment and manpower are operated by the leader's team. Better resource management and optimizing financial results therefore has to begin with the leadership. poor financial skills at leadership reduces the financial awareness of the downline staff and makes them indifferent to the financial issues. Leaders and financial skills. The finance function does not operate production activities nor generate sales revenue. Similarly, company managers with financial skills do not replace the finance function. Understanding finance and related skills facilitates communication across the company. Understanding finance and related skills bring focus to a common set of corporate goals. With financial skills, each company manager is empowered beyond the current skills. Leaders with a good grasp of common finance issues possess credibility for direct business roles. Therefore, leaders with financial skills are more ready for roles with financial responsibilities. Finance is a serious matter. Learning finance and developing financial skills requires dedication of effort. Academic knowledge is good and will be part of lifelong learning, but, at leadership level, finance skills must relate to the business environment. Common financial issues and financial policies are key managerial issues. Therefore, structured learning of finance with dedicated skills development is an investment itself for the organization as well as the individual. Finance for leadership roles. Leaders have to plan and direct their teams to agreed goals and missions. Goals and missions have financial requirements, constraints and outputs. Financial resources are limited and leaders must operate within the availability. Therefore, understanding finance empowers leadership roles, improve the leader's credibility and judgment. Absence of financial skills lowers personal effectiveness and increase reliance on others. Developing financial skills for leadership roles. Here we present a financial skills program for leaders. This is a 4-day intensive program that focuses on common business financial issues. Upon completion, the leader or manager acquires a framework to make judgments. The program provides a platform for ongoing development to business financial skills. The program can be structured and delivered as a corporate in-house event, or as an individual learning activity. Finance for leadership roles. A summary. The program topics includes the economic environment and leadership, resource management covering the organizational return on investment, policies and strategies, budgets and results, financial integrity and accounting controls. And finally, financial evaluation and risk assessment. In each of these segments, common business financial issues are brought into focus to develop familiarity and build ideas for adoption in the workplace. Creating business IQ. A growth organization will always need leaders and managers with business IQ. These are leaders and managers who understand financial implications of the risks they take. Managers and executives with financial skills and thus have better business acumen. And managers and executives who are equipped to evaluate and take on business risk. They all need financial skills, that is business IQ. Beyond the program on finance for leadership roles, there is also the Certificate in Financial Management. The Certificate in Financial Management. The Certificate in Financial Management for Building Business IQ is a structured learning program for leaders and managers to acquire a working knowledge of business finance, an understanding of common business financial issues, and to develop initial skills for building business IQ. This structured program provides for the dedicated learning of finance that connects with the real world, and the recognition of business IQ acquired by a certification issued by Finet and Taylor University CPE. Summary of the Certificate in Financial Management and Business IQ. The key objective of this certificate program is to develop business acumen and skills through a 10-day intensive learning program that connects learning to the real markets, and teaching on how to assess risks and make decisions. Upon completion, there will be an assessment of knowledge acquired and application ability of the learner. On satisfactory achievement, the learner will be issued the Certificate in Financial Management, a testimony of business IQ. Employers with CFM holders then have a crop of leaders and managers with certified business IQ for their business plans and strategies. Overview of the content of the Certificate in Financial Management. The course of study and skills development covers the following components: accounting systems and financial controls in organizations, understanding financial performances and conditions, managing organizational costs and productivity, managing working capital and cash flow, business budgeting and financial planning, investment appraisal and valuations, and financial markets and their activities.